Hello fellow chartists, welcome to my YouTube channel. I am the Chartist, and today I'm going to show you guys how the Chartist does technical analysis, okay? So we're going to go over some things, some patterns that I like to watch. Alright, I have about 3 trade setups, okay? So let's talk about the flags, okay? There's bull flags, and then there's bear flags. Here's the bear flag, and here you can see a bull flag. Okay, so to me, flags are consolidation or strength building patterns. Okay, obviously, if it's a bear flag, it's building strength to head to the downside. If it's a bull flag, it's building strength to head to the upside. Okay, I do this all the time in my trading. I'm constantly looking for flags. Now, as far as time frame goes, I usually look for I look for the flags on the daily chart, or I look for the flags down to the 30-minute chart. Okay, the 30-minute time frame is the smallest time frame I use. Okay, I don't use the 15-minute. I don't use the 5. I don't use the 1 minute. If you guys use those time frames and you found success in it, good, awesome. But I don't use those time frames. I'm not telling you guys you can't use smaller time frame. I just don't personally in my own trading. So I'd rather not talk about things that I don't really do. Okay? So daily chart all the way down to 30-minute chart, I look for flags. Okay? And it's the same principle. It's the same rules. Okay? Whether from the daily chart, 4-hour chart, 1-hour chart, or 30-minute chart, I see the flags, the same rule. So what do? So if it's a bull flag, like this is a bull flag, I will look to enter at the lower level, okay, right here at the support line of the flag, or I can wait for the breakout, okay? Of course, you got to manage your risk. If you buy here at the support of the flag and it drops lower, cut my loss. If we get a breakout, but then it comes back down, a false breakout, which I will talk in a little bit, I'll cut my loss. Okay? Very simple. Both flags are consolidation or strength building patterns to the upside. Bear flags are strength building patterns to the downside. So for a bear flag, I will look to enter at the resistance, as you can see, and bet to the downside. So if I see a bear flag, I'm going to bet to the downside. Okay? Or I can wait for the breakout, then I'll bet to the downside. And it's the same. You got to manage your risk. Set your stop loss. If I entered at the resistance to bet to the downside, up here is around where my stop loss is. I'm trading based on the structure. Okay? Here, if I'm waiting for the breakdown, that's where I'll enter. And I'll set my stop loss just above it again. Alright? So these are the things that I look for time and time again. Either looking for bear flags or I'm looking for bull flags. I love this trade setup. I've been trading it for years. It took me some years to master it, but it's not impossible. Okay? The next thing I want to talk about, my next trade setup, is false breakdowns and false breakouts. Okay? Because obviously, you know, with these flags or even other patterns like channels or whatever, you can get some false breakout, false breakdown. So what do I do in that situation? I buy the recapture. Okay? So for example, here's the SPY and the trend that started back in May, right? Touched here, which makes this a support. And we got this false breakdown right here. Okay? The reason why we get these false breakdowns a lot of time is because the market makers are looking to take out the retail trader stop loss. They go stop loss hunting. And a lot of time, once they hit, they take out the stop losses. This is the area of liquidity. Once they take out the stop loss, they're going to push it right back up. So the best way to deal with that when you get these false breakdowns or false breakouts is you buy the recapture. So if you see a false breakdown and then the stock or ETF or whatever you're trading recaptures the trend, and you bet to the upside. You buy the recapture if it's a false breakdown, or you sell the recapture if it's a false breakout. Okay? Here's Amazon, another example of a false breakdown. Nice trend here. Got this false breakdown, but once we got the recapture, that's where I look to enter. And then boom, right up to our next resistance level. Okay, guys? And of course, got to buy. I like to buy rising trend lines and enter as support, or I sell falling ones. Okay. So what does that mean? Let's take a look at Tesla. Okay. Right here. I'll talk about the falling trend line. Okay, this is a falling trend line. So you enter, if you bet into the downside, you're getting lower highs and lower lows. You want to enter at the falling trend line or at the resistant level. Okay, this is a little off. Okay, now it's touching. All right, started here. We got the touch here, the touch here. You guys see that? Now I know I'm talking in hindsight, but you have to be disciplined enough to follow your trade setup and of course manage your risk. So let's say I didn't know if any of this was gonna happen, right? Obviously I see that this is a resistance line. This is where I would try to short it, and my stop loss will be set above. I'll cut my loss as small as I can. And if it gets recaptured, like I said earlier, then I will bet to the downside. A false breakout is very bearish, okay? But this is what I would do. I sell the falling trend line. We have a rising trend line. I'll buy the rising trend line right off of support. Here's another example on Tesla. Okay, rising trend line, got a lot of touches. Okay, so if I'm seeing this, been touches on the support, I'm going to be betting to the upside. Maybe I'll take profit. You see, you gotta figure out where you want to take profit. Maybe I'll take profit at resistance. Okay, and keep it that simple. It doesn't have, trading does not have to be hard. All right. So recap. I look for flags, bear flags. I will enter at the resistant level, bet to the downside, or I'll wait for a breakout and bet to the downside. Okay. You cut your loss just above it. Okay. Another thing you can do is you can wait for the retest. If you see a breakout and you don't want to catch FOMO, a breakdown, excuse me, you don't want to catch FOMO, you wait for the retest and see if it'll go down lower. Around here is where you would enter. Okay? This pretty much confirms that this is not a false breakdown. Okay? Same with a bull flag. This hasn't happened yet, but the same thing. You can either enter here, or if it breaks out, you can wait for the retest. It confirms this is not a false breakout, and then boom. Okay? Now, how to trade false breakdowns and false breakouts? You get a false breakdown, you buy the recapture right there. Here's take a look at the VIX. VIX had a false breakout, and it closed back into our trading channel. It's a false breakout, which is very bearish. That means you bet to the downside. You sell at the recapture. Okay? We got a rising trend line. You buy off of the trend line. Set your stop losses below the trend line. Falling trend line, you sell at the resistant level. Set your stop loss above the level. Okay? The resistant level. Set your stop loss is set just above it. Alright, guys? It's really not that hard. Okay? The hard part is having the emotional discipline to follow these trade setups. Okay? These same rules that I use on the daily chart can be used on the 1 hour chart. It can be used on the 30-minute chart, the 4-hour chart. Alright? Maybe you guys like using small time frames at 15 minutes, 5 minutes. The reason why I don't like those small time frame, they have their benefits. And like I said, if they work for you, good, keep using them. But sometimes you get a lot of fake outs, okay? With the daily chart, and I feel like you get less fake outs. It shows the bigger picture. It's more accurate. Okay, they take more time for the trade to play out because it is the daily chart. Each candle represents a day. Well, 5 minute chart, everything happens quicker, but that's why uh, you get these more fake outs. Okay, guys. So as far as my setup goes, it's on I use TradingView, as you can see. As far as my setup goes, um, I use these are my moving averages. I use the 5-day moving average, which is one of my favorite moving averages, the 13-day, the 50 and 200-day moving average, and of course the 20-day moving average. And I like to use them when I create these trend lines. I also like to use the moving averages as support and resistance levels. Now remember the power of the 5-day moving average. Okay, let me clear these lines. All right, I'm just going to take out the 13 and the 20 and the 50 and leave the 5. Okay, the 5-day moving average, one of my favorites. In a strong bull trend, you will get lots of bounces off the 5-day moving average. It doesn't always bounce off the 5-day moving average, but you'll get lots of bounces. So when you're trading, you want to have a probability mindset. Okay, as you can see here, strong bull trend, strong up move, lots of bounces off of it. When it's a strong move to the downside, you get lots of rejection off of it. All right, you need to see these support and resistance levels as levels of equilibriums. Okay, but as long as they above the 5 and it's bouncing, that's a good indication that we're gonna have more up move. Okay, if you see it breaking down, that's a good indication that we're gonna go down to the next support level, which is the 13-day moving average. Okay, we closed here and boom, we got right back down to the 13-day moving average. We bounced up a little bit, came back and rejected the 5. Like I say, in a strong bear market or bear trend, you're gonna get rejection, and we close below the 13-day in this one. So that's a good sign that we're gonna head down to the next support level. All right, and it broke that support level. Okay, so you play it level by level. If it breaks the 20 and it get rejected from the 20, that's a good sign that we're gonna head down to the 50. Okay, the 200-day doesn't work as well. All right, especially with the SPY, you have to check the behavior of what you're trading. With the SPY, it rarely touches the 200-day. Right, that's why I like these Bollinger Bands. I also use them as a support or resistance level. You guys understand? Here's Tesla. I see the power of the 5-day moving average. You see? When it's an up move, we're getting strong bounces off the 5. All right, we break the 5, it's a big chance that we're going to head down to the support level. These are support level. Okay, so I use these moving averages in conjunction with my trend lines. You guys understand? Look at that. Strong up move, bounces off the 5. If it's not bouncing off the 5, it could either be heading down or it's just moving sideways. Look at that. Lots of bounces off the 5-day moving average. This is the power of the 5-day moving average. Now Tesla's starting to break below. When you see that, like, uh-oh. Let's say you don't know none of this happened, but you see this. Uh-oh. We got a break under the 5-day and they try to come retest and we got a rejection. That's going to tell you, that's a sign that we're going to head down lower. And we did, right? Came back, retested the 5-day moving average, and it got rejected again. Now we're possibly going to head down lower. Looks like an A, B, C correction to the downside. All right? Let's look at the VIX. Bring the 5-day moving average. Look at that. Lots of rejections from the 5-day moving average. Sometimes it goes a little higher, but what matters is where it closes. Okay, it kept continuing to close. Look, King try to go up above it, reject it. Try to go back above it, reject it. Okay, try to go back above it. That's when it started going back above. We got bounced off the 5-day. Looking like a bull trend is building for VIX, and then boom, we closed right back below it. So that's a sign we're heading back down to our next support level. Okay? And that's pretty much it for my technical, how I do technical analysis. Very simple. All right? I watch for flags, bear flags and bull flags. I watch for false breakdowns and false breakouts. And I buy the recapture. Okay? I buy rising trend lines and I sell falling trend lines. All right? As far as my moving average goes, I use the 5 and I pay close attention to the 5. If I lose the 5, I pay close attention to the 13, then the 20, and then the 50 and the 200, and so on. Levels by levels, guys. All right? Now I'm showing you the daily chart. But keep in mind that these same rules can apply in the 1-hour chart and smaller time frames as well. Okay? So, for example, obviously this is a 1-hour chart. It also bounces a lot off the 5-hour moving average. Okay? Same principle. Obviously with the 1-hour chart, it's going to be more volatile. Okay? I also use trend lines in the 1-hour chart. Same thing. As you can see, SPY starting to break out a little bit on the 5-day. On the 1-hour. All right? I look for flags, bears, and bulls. I look for false breakdowns and false breakout like this. I'm watching. We got the breakout. But if it's a false breakout and it starts closing below it again, I'm gonna sell the recapture and bet to the downside. Okay, guys? So that's it. That's how I do technical analysis. This is not really a secret. All right? It's not really a secret. It's very simple. The hard part is having the emotional discipline to be consistent and following these patterns, following these trade setups. Okay? And if you are looking, you want to find these trade setups, I use a TOS, think or swim scanner, and you can set your patterns, you can set your filters on what and conditions on what you're looking for. Like you can look for flags, ascending triangles, channel up and channel down, falling wedge, rising wedges. Okay, so get you a think or swim account and use their scanner. Okay, guys? So nothing fancy here. That's all I got to say.